Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is August 7th, 2016 edition of Market Outlook. So, quite a bit of the little head fake. Couldn't really develop much more downside. Markets responded. We got some issues, but not many, and we're going to cover it. Let's take a look at where we are and what our little big view product is telling us here. First of all, a couple things to note is volume, right? You've had accumulation days across the board on Friday. Overall, interesting disparity. You can see that the Dow having some issues in terms of volume, even though we're pretty close to all-time new highs. However, the Russells and the NASDQ 100, which had been the laggers, over the last 2 weeks gaining some interest, and you have institutional accumulation. As you can see, you've got 4 and 5 accumulation days in those two indices, a little bit more mixed in the Dow and the S&P, but net volume a positive. Now, taking a look here, you can see actually this week the Russells and again the NASDAQ, the biggest gainers, with Dow and the S&P picking up, but still closed up 0.5%, picking most of that up on Friday, where on Thursday and earlier in the week, the markets had been under pressure. So considering the frothiness that some of our internals had shown, which we'll get into, it's interesting. That's all the market can muster. And even with this less percentage increase in price, the S&P and the NASDAQ both closed on new all-time highs, and we'll get into some of the technical pattern in a moment, but that's a plus as well. All right, now let's take a look at the sectors and see how they're doing and if they're pretty much running in unison. As you can see, a couple of things occurred. I'm going to mention, let's see, let me grab the pen here. Okay, well, first of all, take a look at XLU, right? Now, that had been one of the biggest and best performers for the year, still on an absolute basis, year to date up 17%. That's in number 2 position. So still very strong, but look what's happened here. Utilities down 2.7% for the week, while the market itself was up. And you put that together along with the interest rate picture, and stocks are really gaining on bonds. That is a positive. And stocks gaining on utilities, which is a really good indicator of risk on, definite increase. So in good shape there. All right, now let's take a look at this bottom chart here, and you can see that all of the sectors here have positive 6-month rate of change. So that is a positive. You're over the 200-day moving average. Everything pretty much in gear. The fact that we've got that 6-month return right here, you can see everything is positive over the last 6 months. That's pretty good. And we're well over the 200. So what do I say about this particular angle of looking at sector participation and overall returns? A positive. Okay, let's take a look at some outperformers and laggards this week with a little bit more depth, and a couple of things to take note. First, commodities, and some of them really perform well. Look at this. Sugar really moving up nicely. 5-day change, 8.6%. That's looking really, really strong. Volume, a little bit light, but overall, the sugar ETF, really powerful. The other thing that's been lagging is financials, and regional banks came on strong as well in light of positive economic news with the jobs report, overall really supportive. So that had a really nice 5-day change, definitely picking up the rear here. So that's good. Like to see more strength in the regional banks and financials. Now, going counter to its huge move this year is gold, not surprising, and gold mining, small correction after this monster move right here. Now, the other thing that we want to point out is volatility. Long volatility got crushed. We actually hit, depending on how you look at the volatility, a 5-year low. So volatility definitely getting crushed as the market goes up, which is to be expected. And we're not quite at what I would say all-time lows, still 10 to 15% away from that, but we'll get to it. The fact is that as the market's going up, we do expect the volatility to compress. It's now getting to some pretty significant levels, which we'll get into in a moment with some more detail. And again, minor correction. Again, if the markets do pick up and the economy does pick up and some of the industrial numbers start improving, XME, which is also up 108% over the last 6 months, paused this week. But that's a very, very mild reaction. XME has a lot of silver, which corrected this week, put a bit of a weight on it. But again, metals and mining, industrial metals, definitely underpinning this particular ETF right here. So even though, again, we're a 6-month leader this week, not really doing very well, but overall could really still come on strong. Don't think XME is finished. And if we do get continued economic improvement, I could see this really still flying. Gold miners, interesting, may have peaked out here temporarily. We'll watch it, but overall, still in a very, very strong position and a relatively meek decline considering how strong it's been. And once again, just focus on the relationship here, long volatility, really getting crushed. We're going to take a look at that at a little bit more detail. Now, of course, FXB, the British pound, got killed as the central bank in England lowered rates, putting pressure on the pound. That is obviously a fallout from Brexit right here. We're down almost 10%. That's pretty significant. And again, what I'd like to see is this particular currency stabilize, and maybe that would shed some light on Brexit not being as important as we had originally thought. But meanwhile, the continued pressure on the pound definitely makes that Brexit vote look like it's going to create more pressure economically for the EU and specifically Britain. But meanwhile, overall, equities seem to be temporarily shrugging it off in Europe as well. Okay, let's take a look at some of the market internals. Okay, so here we have the McClellan oscillator and shorter term up-down volume. So let's take a look at what happened. We got overbought, but the market still continued to go up. And again, this is not uncommon when you're trading well above the 200-day moving average and you just came off of a massive sell-off. But we were concerned, right, that we hit overbought levels, right, which we hit, but we wanted to see it, these indicators break their midpoint as well for the signal. So now look what happened here. On our McClellan oscillator, we actually broke the midpoint, and when we broke under the 10-day moving average and all this compression here, you got that sell-off, but it was so mild And actually what occurred is you touched what I would call the beginning of oversold levels, which were not confirmed by the shorter term indicators. So in essence, you got a sell signal here, but really you almost got to oversold and now bounced, and your other indicators are coming back. So if that's all you can muster on the downside, again, all these indications are helpful, but they have to be confirmed within price action. So at this point right now, let's take a look and sort of tally where the S&P 500 is in terms of the internal strength of the market, right? So on a short-term basis, up-down volume sort of improved, and it's sitting right above the midpoint. So that might have been all the sell-off you've gotten, and now you're on a trajectory back to the upside. So again, I would come back to this website and take a look and see how this is doing at the end of each day. But right now, this one is sort of neutral to a bit more of a positive. On the McClellan oscillator, again, we ended up getting overbought. We like it to see across through the midpoint. We got it. Got almost no downside action. That, to me, is a net positive, and we're about, if we continue up, to cross back over the midpoint after touching down here. That would be a sell signal. So I would give this at the moment, a neutral, right? Because you got oversold. Your movement up here is about touching or close to touching this midpoint, which would definitely give you then a bona fide sell signal. So I would say this one is definitely a neutral. And down here, advanced declines. Again, here you have it. We're back over the midpoint. I would call this a neutral. So market internals, after running rich, was only able to do very little damage. Overall, net positive from a price action. 10 over the 50, over the 200, stack positive. If you look at phase, that's a positive. Okay, let's take a look at the composite, the NASDQ composite. Similar picture. Remember, we had been pointing out that the NASDQ was making up for some lost time. And look at that, a nice breakaway gap on Friday on the basis of that really good jobs report. And again, look, you get overbought, get overbought, get overbought. When you get that overbought and you start rolling over, you really want to see these indicators cross back under their midpoints to generate a signal. In this case, your McClellan did, and then within a day or two, came right back up on Thursday and Friday. So I would call this one more of a neutral to a slight positive. Similar scenario up here with the shorter term 5-day up-down volume. Call that a bit of a neutral. And advances versus declines, certainly a neutral, right? Overbought, coming off, but more of a neutral. So even though you've been running relatively rich, again, you have not even been able to cross under our 10-day moving average, and that is positive. And a breakout on a gap to new highs look like you should be able to get continued follow through. Okay, let's take a look at a couple of other market internals. As you can see from a market internals perspective, the new high, new low ratio, which is sometimes lagging, but overall a pretty good indication, certainly when it crosses the midpoint or gets, really oversold. These are important levels. And right now, right, and of course, when you come back down through the 70% level after being at 70% or higher, that also generates a sell signal. We're not anywhere close to that, so definitely still in gear. That's a positive. New highs, new lows on the S&P, definitely lending support to the market. Qs, same scenario. We've basically got pretty rich, working off a little bit frothiness here, but overall, again, you're at the well above 70% and not really turning down. Overall, closing on new highs, and the new high, new low ratio intact. I call this a positive as well. So as you can see, we've got a lot of support to the market in general. Do we have a little bit of frothiness and some sideways action on volume and market internals in terms of advanced declines? Yes. New highs, new lows, definitely a positive. Now, here is where we've got some issues. Sentiment is definitely running extremely rich. And we had mentioned that before. Now, it can continue to run rich for a period of time. So until it actually reverses, right, and comes back through here, although there's extreme frothiness, I would say this is caution. So it's sort of a neutral here, right? I wouldn't call this wildly bullish because we've now touched the bottom of this Bollinger Band. So if you go back and look, you can see somewhere, certainly 3 to 5 years out, this is about the lowest it's been, which is a confirming indicator to the overall direction, with the exception of using extremes. And here you have certainly an extreme. Now, it can get more extreme. Now, in terms of our models, our global macro model, which trades volatility, took a portion of its short volatility trade off and locked in a good 20% just over the last couple of weeks. And we have a no loss stop on the balance in case that there is a reversal. Otherwise, we're going to let the tail run. So in essence, again, trend. This is really confirming the trend up, although extreme frothiness. So maybe some of the upside is limited with this type of sentiment, but overall trend intact. I call this, again, more of a neutral to a positive until you get flagged. So this is still, even though it's favoring the market, it's really giving you a yellow caution light, because any reversal here could lead to a decent sized sell-off, considering where we are, right? Down over here. Okay, let's take a look at the spread between 1 month and 3 month volatility. Again, what we had, which was interesting, which led to that really minor sell-off, right? We had been showing that we were running a bit rich, right? Once you get above the 1.2 level, it's rich, and we like to see a turn down confirmed by all the lagging moving averages. We did get that, and all you got was the move through this 10-day moving average for a couple of days, maybe 2 days. So even with this extreme frothiness up here, right, some of these values, and look where we are now, this is, again, pretty extreme. So sentiment running really rich. This, until it turns down, is still a positive, but really overbought. So I would say more of a yellow flag. So from a market internal standpoint, you've got some issues in terms of sentiment, looking at options, and also looking at some of the market internals that seem to be flipping around from overbought levels. But overall, market position looking good. SPYs versus utilities. SPYs really improving against utilities, and against bonds, that's more of affirmation of risk on. So overall, trend up, looking positive, and again, just running a bit rich. So let's keep our eyes out. Obviously now, a violation of Thursday's lows would really give me some cause, because that would be an important failure. All right, I hope this helps. See you next week. Stay frosty, because we are running pretty rich as those sentiment indicators are showing, but meanwhile, trend intact, and there you have it. Thanks. Bye for now.